friends, welcome to Nirmal Bang. I am Piyush Jain, and today we are bringing to you a new company which is into realm of platforms, fintech platforms. There's a new IPO, and we are very soon going to get see this company getting listed. Let me now introduce the company first, Zaggle Prepaid Ocean Services Limited, and now let me welcome the management, Mr. Avinash Ramesh Gotkindi. Avinashji, welcome to the show.
Thank you so much, Piyush, for having me here. Thank you.
Um, Avinash, this is a very sort of interesting company, interesting business model. Perhaps I think let's first start from your business model perspective because you have a couple of products. There is a Propel, which is a SaaS platform. You also have a Save. Again, it's a SaaS platform. There's a customer engagement management system, CMS. You also have payroll cards, which you call as Zaggle payroll cards. There's a Zoyer again, which you basically have another SaaS-based business spend management platform. So again, dear viewers, as you're hearing, these all actually are catering to B2B platforms again. So very interesting sort of product suite, and also your customers include many of the top banks. So help us understand the business model, what's the input, how you're making money, and what sort of clients you have.
Thank you, Piyush. So, I'll also first upon touch on the name Zaggle, because a lot of your viewers would be wondering where does the name Zaggle come from. The name Zaggle comes as an antidote to haggle. So, if you think of it, all of us as Indians, we are good at haggling. We like to haggle. We seek the best possible deal, and rightly so. Our thought has been that can we offer the best possible deal to all our key stakeholders, our corporate customers, our users, our partner banks, our partner merchants, can we offer the best possible deal upfront so that there's no need to haggle? And that's the philosophy, that's the thought that we started off. We are a SaaS fintech company digitizing spends. We are a leading spend management company. So, Piyush, if you look at any company today, they incur a variety of expenses. And they need to control those expenses. They want visibility on those expenses. Those expenses could be around employees, it could be around channel partners like the dealers, distributors, retailers, or it could be around their vendors, right? So we're keeping aside the budgeted capex, which is a one-off and taken at a board level. But other than that, you can basically categorize all the spends or expenses that a company incurs in these three large buckets. What we offer is a comprehensive spend management platform, a software platform, tightly coupled with payment instruments. Those payment instruments could be prepaid cards, they could be corporate credit cards. And as you rightly highlighted, we partner with a whole host of banks today, banks like ICICI Bank, Yes Bank, IndusInd Bank, NSTL, and DBS, to be able to run these programs. And we have a corporate credit card that we very recently launched with Yes Bank. And we hold today 16% of the market share of the prepaid card market share in India. Right? This is as per the Frost and Sullivan report.
I want to jump just to give more clarity for our viewers. So when you say prepaid cards, because when we say prepaid cards, you also start thinking about debit cards. Are you saying about the entire debit cards? You hold the market share in that, or you're talking about in terms of the travel cards, the gift cards? Like, what is the sort of segment we're talking about?
Yeah. So there are three categories of cards. There's prepaid, there's debit, and there's credit. So I'm talking of the prepaid segment. So the FASTag that you use is a prepaid product, right? Prepaid instrument.
Yes.
So I'm talking about a specific use case in prepaid. We don't operate in the debit card segment. We operate in the credit card segment and the prepaid card segment. So that's the product. And what we do is we marry the software, which gives the control to the CFO, the limits, the visibility as to who's spending, where are they spending. So for example, you could go to the platform and see how are my branches in Jaipur performing, right? Or Delhi performing. Which branch is incurring more expense, which branch is spending less, why is the spend more efficient in a particular branch. And you can drill down that on an employee level, a user level. For an employee that is incurring expenses on behalf of their company, they are able to scan their bills, upload their bills, and submit on the platform, on the mobile app. The mobile app has optical character recognition. There's an AI ML driven engine. It's very easy to submit your bills on the go. Our app use is also multilingual. So unlike a lot of other players in the space, we cater to the California Indians, we cater to the Indians and the Bharatiyas. So we are trying to cover the entire gamut, and we are, in English, Hindi, and six other languages, vernacular Indian languages.
That's
So
very interesting. Language perhaps is a very unique thing than what you're offering.
yeah, because one of the insights that we got working with companies like, say, a Tata Steel, a Greenply, a Hiranandani, a Philips Carbon, a lot of these companies, have dealers, distributors, vendors who are more comfortable with the regional language. And we just realized that if we offer that platform to them in their language, the adoption automatically increases. You don't need to force that adoption versus a platform which is only English, caters to a niche audience. So we have tried to look at it from a user perspective, and rather than trying to judge our users, we say it's our responsibility to make it easy for them to use.
Hmm. That's interesting. From a perspective of input, this platform you would have created over a couple of years. Is it like a cloud platform, AI inbuilt, already FinTech inbuilt? Is the platform already all the technology capex behind you?
So the beauty of tech, Piyush, is that it requires continuous, nourishment, and you need to keep investing in tech, because that's a big differentiator for a lot of
But
new age companies like us.
But that would be like innovation capex, right? You will keep recognizing
Correct.
the needs and then keep innovating, adding features. But the bulk part of the technology, which you would have earlier spent many hours, a lot of money in actually doing those trials and then perfecting it, is that something which you are satisfied now that that part is at least behind you?
Of course, the base platform is rock solid, and as I said, we have 2,400 plus corporate customers. Majority of our customers are enterprise and mid market. So when you work with an enterprise and mid market customer, Piyush, in that segment, you can't have a half baked product. Their expectations are very clear and steep, and they want a platform that's completely secure. One of the things that we pride ourselves is in the fact that we are, again, a GDPR certified and compliant platform, PCI DSS, ISO 27001. So we are very careful in terms of how we deal with security, data, the transaction per second. So those are all things which we have finished already. The innovation, the newer features, as you rightly said, that's constantly we are trying to get better.
Right. And what's the total capex which you had spent on building the entire technology infrastructure, the platform infra?
So the way I'll answer that question, Piyush, is over the course of the last 4 years, we have capitalized about 21 odd crores. Having said that, the investment in tech is much larger, because the way we look at it is we only capitalize, at least thus far, that investment that we make in developing a new product. If there's an enhancement, there's a improvement in that product, that's when we go ahead and capitalize it. Any routine maintenance that is there, any BAU support is there, that we do not capex
Course.
at all.
Of course, that's the operational expenditure. I agree with you. But now help our viewers understand how's the revenue looking like for the last year, FY23.
Yeah, FY23 we clocked about 553 crores, and again, as I would highlight, we are one of the few profitable fintechs in the space. Last 4 years, we are PAT positive, and we are a frugal company. We are a capital efficient company, and we focus on being able to bring value to all our stakeholders.
I want to actually sort of go inside the fintech here, what is sort of fee income, how this model is working for you? Is it like when you issue the cards and like you hold the 16% market share, as you just said in the prepaid cards? So when the clients they spend or the employees spend, overall client is spending, In that, actually, you earn the fee income for every rupee spent.
Correct. So, Piyush, great question. The beauty of our model is that we believe in making a little bit of income from each of our stakeholders rather than trying to burden one pillar, right? So, we charge software fees, a SaaS fee per user per month fee to our corporate customers. We charge, or we invoice what we call as program fees that constitutes all our income that's generated from the transactions on the card, right? So every time you spend money on the card, we earn income in partnership with our partner banks. And that's something that we invoice to our partner banks that I mentioned, banks like Yes Bank, IndusInd, ICICI, DBS, etc. And also to partner networks. So we work with Visa, we work with RuPay, and we also work with MasterCard. So we earn on transactions, we earn on software fees, and in case somebody has received points from their corporate. So one of the large solutions that we have, Piyush, is called Propel, which is around rewards and incentives for employees and channel partners of companies. And this platform, Propel platform, basically works on the model that the company can go ahead and incentivize their employees or channel partners in the form of Propel points. These points can be redeemed in two ways, right? One, you could redeem it for a voucher of over 300 brands, so brands like Shoppers Stop, Amazon, Tata Click, etc. Or you could go ahead and put the points, that money equivalent of those points, onto a prepaid card that's issued by Zaggle in partnership with banks. So if you redeem the points for money onto your prepaid card, then when you swipe the card online or offline, we earn the program fees that I mentioned previously. That's about 1.8 to 2% of every spend that we make as our share. Or you could redeem it for these vouchers. In the case of vouchers, we earn what we call as the Propel points or gift cards revenue.
So almost fees associated with every platform.
Yeah, that's the idea, that you try and monetize a little bit from the corporate, a little bit from the banks, the networks, the merchants, rather than burdening one segment too much.
Let's go into more numbers here. Like what was the sort of transaction volume on your cards the last year?
So overall, if you look at the transactions per se, Piyush, I can't give you the exact numbers,
Sure.
but you can sense that runs into thousands of crores. That's the volume that we process, and as I mentioned, our market share is about 16%. Totally, we have issued about 50 crore, 5 crore cards thus far, and a little over 1.07 crore cards are active as of today.
Okay, sounds
As
good.
of March 31st, 2023. Yeah.
Sure. I was also looking at last 2-3 years of numbers here. Help me understand, how was FY23 different from FY22? Because overall the revenue from operations were growing very healthy. It was like strong set of revenue growth, but then there was a sharp sort of growth in from the perspective of cost, which was the redemption points. So what happens, so that we understand like how the sort of numbers move here? Like
Yeah.
what happened in FY23?
So, 2, 3 factors here, Piyush. One, we focused a lot on our Propel points revenue and Propel points redemption, because here our overall take rates are higher, about 12%. Although this is a gross number, and India's rules dictate that we take it as a gross number. So let's say 10,000 points are redeemed by somebody for a voucher of a face value of 10,000 rupees. The voucher is costing us about, say, 8,500 rupees, right? I'm just giving an example. So the revenue recognition is 10,000 points is redeemed, so I recognize 10,000 rupees as my revenue and 8,500 rupees as my direct cost. Now, because my revenues grew very rapidly on Propel points slash gift cards, which was about 360 crores last year, give or take a little. So consequently, the costs also increased. The other couple of things that happened last year was that when we decided, Piyush, that we'd go ahead and go IPO, last September, we issued ESOPs to all our employees.
Mhm.
That included, right from the junior most person to the senior most person. So we took a ESOP cost of about 14.5 crores last year, which was
Mm.
not there in FY22, right? We also expensed out a lot of investment that we made on building our credit cards platform, um, and that was another significant chunk. So if you look at all those pieces, that's why the EBITDA and PAT have taken a slight dip in the last year. But these are for very specific reasons, and in some ways, some of them are one-offs.
Okay, and now let's go to the final number, and that actually is please help us understand how much funds you're raising from this IPO and what is the fund usage.
Yeah. So the pre-IPO was 98 crores, Piyush. In the pre-IPO, we had names like Ashish Kacholia, the Kela family. We had Value Quest, which is Mr. Ravi Dharamshi's fund, participate. In the anchor book was, the total primary was 392 crores, right? Is 392 crores outside the pre-IPO, and 171 crores is the secondary that we are doing, which is the OFS. In the primary, about 254, 253 odd crores was anchor book, and the anchor book is fully subscribed, and some of the names that are there is ICICI Prudential, we have Kotak in two funds, we have New Berger, we have Loomis, we have a whole host of names there, Matthews Asia, and others who have participated in the anchor book.
Sure, that actually reflects a very strong vote of confidence before the IPO, and perhaps there is one thing I wish IPOs will take note of. Just from a fund usage perspective, I was just reading through around 30 crores, perhaps 300 crores actually, roughly perhaps is actually assigned for customer acquisition expenditure. Uh, what sort of kind of that would be? I'm just relating it to perhaps in the future what impact it could have. So, what
Yeah.
happens there?
So basically, this is as a B2B2C model, Piyush. So our cost of acquisition is not so much high compared to a B2C model. What we invest is in retention. Our number of users is today about 23 lakh users and over 2,400 corporate customers. And we always have a certain set of users who are looking for a little bit of a nudge, especially when they come onto the platform for the first few times, a little bit of nudge for them to start using their Zaggle payment instrument, Zaggle card, right? So I'll give you an example. Let's say you're a first-time user, you come to the Zaggle platform, you have a reimbursement or an allowance, you're trying to buy something on Swiggy. There's a certain inertia that comes onto Swiggy or Zomato, both any of those platforms. I'm not favoring one or the other. You will need to register your card, right? How do I get you to start registering your card on that platform? Because once my card is registered, you're more likely to keep using that card, right? So there are some of these nudges that we need to give. And historically, also, if you look at my Zaggle's P&L, over the course of last 3 years, we've had a line of which we call as the incentive line. And that's the line which has constantly moved down from 140 crores to 118 crores to 100 crores. So our algorithm is trying to optimize how much incentive we should give while overall the revenues have grown, the users have grown, the corporates have grown. And this 300 crores is linked to that, and it's over the course of 3 years.
Okay. So basically, this is going to be allocated over 3 year period. We'll close with my last question. That would be just a recap on the numbers. 2,400 already corporate clients, about 23 lakh users on the platform. Was that the right number I heard?
Yes, yes, yes.
Okay. What was the average revenue per user?
Per user, we don't necessarily look at it from that perspective,
Because
Piyush.
corporate
But
clients, so billing.
overall revenue was 553 crores. So you could do the math, right? And last 4 years of profitability. Last year was 23 crores in PAT, 48 crores in EBITDA.
Okay, so those numbers actually are giving us two insights. One is a very profitable for multiple years for a fintech platform. Second, a well-established platform with top-tier green clients. And third, which perhaps should be exciting for our viewers, is that Anchor Book has already been subscribed by top-quality institutions. And with those insights, I'll extend all the best wishes to you from our viewers, from our side for the IPO.
Thank you so much, Piyush. We are a frugal company, bootstrap company largely, and we believe in creating value for our investors. That's what our focus will be, to serve all our stakeholders to the best of our ability. Thank you so much for this opportunity. I appreciate it.
Thanks a lot coming on the show. And dear viewers, with that, it's a wrap on this conversation. Hope you enjoyed it.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.